This is the Global Economic Commodities Scrap Metal and Recycling Report by our Bentley roll-off trailer and open-top trailer, September 21st, 2020. U.S. weekly crude steel production rose to 1.495 million tons, a multi-month high, as the economy continues reopening and as U.S. exports of steel are up. Crude oil price rose to $41.11 a barrel, with the highest weekly percent increase since June, as demand is increasing very slowly and as OPEC and other countries continue supply constraints. The U.S. weekly oil rig count fell to 179, near a 10-plus year low, down a huge 88.9% from the 2014 high. Low oil prices bring low capital expense. U.S. weekly oil production rose to 10.9 million barrels a day, still near a multi-year low. Low demand brings oversupply, so therefore low prices. Lower pumping limits supply to get prices up. Scrap steel number one heavy melt export buying price Philly rose to $235 a gross ton, a multi-month high. Demand is good, as a weak U.S. dollar makes exports cheaper and imports more expensive. Scrap steel number one heavy melt price was steady at $245 a gross ton, a multi-month high as global demand is slowly increasing. Hot rolled coil steel rose to $28.62 per hundredweight, a multi-month high as the U.S. and global recovery continues. Copper price rose to $3.10.7 a pound, a multi-year high. This is outstanding news due to high copper prices are a major positive economic indicator. Aluminum price rose to 79.5 cents a pound, near a multi-year high as slow growth continues and there is a good balance of supply and demand. Canadian retail sales rose 0.6% versus July as motor vehicles and gasoline were up and food and sporting goods fell. This is a very positive V-shaped recovery in retail. U.S. retail sales rose 0.6% as well versus July, and that was actually below forecast. Lower unemployment benefits are hurting spending. Food services were up and department stores were down. U.S. industrial production rose 0.4%, the fourth consecutive month of growth. But growth slowed in most industries since June. Durable goods were up 0.7% and mining fell 2.5%, mostly due to the recent hurricanes. The U.S. federal funds interest rate was announced to be unchanged at 0 to 0.25%. The Fed said they would hold this through at least 2023. They also said they forecasted U.S. GDP would be negative 3.7% in 2020 versus their previous forecast of negative 6.5%. So that's good news. The U.S. NAHB Housing Index, which indicates market conditions, jumped to 83. That's the highest on record. Drivers were low mortgage rates and demand, and that's as people moved out of the cities due to COVID. This is great news for housing. U.S. consumer sentiment jumped to 78.9, the highest since March. This is the gauge of current market conditions, which actually rose. U.S. initial unemployment claims fell to 860,000, the third month of under a million, which is good news, but remains well above 665,000, which was the peak of the Great Recession in 2009. Wall Street's Dow Jones Industrial Average fell 11 points to 27,655 as markets are very, very nervous over COVID. There has been very positive vaccine news, which is helping the markets. Importantly, the third quarter growth could be a record. As always, feel free to call or email me with any questions. We hope all have a safe and profitable week.